As for the broader outlook for commodities, let's get some insight analysis from one of the regular contributors at CMC, Mish Schneider, who is the Director of Trading Education and Research at MarketGauge. Mish, nice to see you. How this year been so far?
Well, surprisingly well, in that, forgetting about commodities, which I know we're going to talk about, even equities at this point has been relatively happy. And that is obviously because people feel that inflation's back has been broken and that the Fed may not be so aggressive. I would say that's the main reasons, because certainly with the debt ceiling coming upon us and another Fed meeting that still sounds hawkish, and our GDP, which doesn't look like it's going anywhere soon, the market is counting on all this bad news to keep the equities up. But we're really going to focus on commodities because there's a rule here that equities and commodities can go up at the same time, and at some point that will separate in terms of its relationship. And we believe certain commodities will continue to rally, entering sort of a super cycle of commodities, if you will, while equities can more stagnate than crash.
Right, you're absolutely right. That old debate seems to be raging on Wall Street for a while now. Let's just start with the early actions of this year. What's your take on what's been happening in the commodity market and the rallies we've been seeing?
Well, the thing that we really anticipated has worked out very well is that the industrial metals and the precious metals would take the lead as far as commodities go. And certainly that has been the case. If we look at the chart here of gold, you're looking at a weekly chart. And even though we are seeing a lot more equities entering into bullish phases as the market has gotten stronger, gold has been on a weekly basis since December, actually maybe even more November of 2022, entered into a weekly bullish phase, because the blue line is the 50-week moving average. And the green line is the 200-week moving average. And also, if we go down to the real motion indicator, you can see that the momentum, though, has not nearly been as strong, but yet is getting better. And of course, this has been outperforming the S&P 500 for quite some time, also since about that October, November. So that's why we think that not only did gold, even though it sold off with the rest of the market when we had that dip in October, we believe that gold can continue to outperform and possibly even go from its price around $1,900 an ounce, maybe even to a double of that at some point by the end of 2023 into 2024.
Right, and on the short-term side of things, what are you looking at in terms of gold? Are there any key levels that you're interested in?
Well, let's now switch to a daily chart here just to get a little bit of a different time frame. And again, what's happening right now is the 50 is finally crossing the 200, which is putting it into a golden cross, something that we haven't really had with any kind of velocity until the beginning of 2022, when we had that huge rally, and that, of course, was on the heels of the Ukraine-Russian war. So things have subsided since then, but what you can really see here is the momentum here has gone crazy to the upside, and it's still well outperforming the SPY, although more on par with the recent rally. We think right now that you have tremendous amount of support if we're just going to evaluate the GLD at around 170, and that if we can fill this old gap that we've had here, the gap has to be filled up to this low right here that was made on, let me try to manipulate this better. Here we go. April 2022. That low was 179.74. So far, the high in gold on this move has been 178.83. So we feel that if we can get through that gap, that would be a very healthy sign. And so let's call it 180 just to round things off. From 180, we see no reason why this can't at least test the high that we had in 2022 and then continue further. So that's what we're looking at right now, about a 10-point range in the GLD, or really basically 170 to 180.
It really has been an interesting trend to watch this year around this growing interest in gold. But also the US dollar has been strong in 2022, but that's moved into more weakness lately. In terms of your own outlook for gold, is currency a factor in that? And could the current market behavior in general, in addition to the weakness of the dollar, mean bullish for commodities in general?
Well, the dollar is definitely a factor. If you look historically, it's not the only factor. There have been times where the dollar has been stronger while gold continues to go up. We believe, though, right now that the reason why the dollar is going down, and the most concerning thing about the dollar going down, is what's happening with China and Russia and India and BRICS, which is right now we're seeing a lot more interest in doing gold-backed currency to support buying crude oil. And that's a trend that, if it continues, would be not only bearish for the dollar, but obviously very bullish for gold, as we can see countries that are buying gold tremendously right now, including some African countries, but certainly Russia and also China. So all of these reasons mean that it could put pressure on the dollar. But even regardless, if the BRICS thing doesn't come to pass, something that people have been watching now for years, we still think that the dollar is vulnerable for many other reasons, and this is all bullish for gold. One being sort of the anti-globalist reaction we have right now throughout the world, where countries are really involved in taking care of themselves, and they have to be, which means you have sovereigns spending a lot of money to try to boost up their economies, like we're seeing even in Japan still with bond buying. We think the United States is going to have to do that too, particularly as I mentioned earlier on, as we get into a debt limit potential crisis come later on this week. So all of these reasons, there is no reason right now, unless the Fed came out and raised interest rates way higher, that gold should do anything but go up. Of course, that doesn't mean it can't dip, and we're looking at those corrections as buy opportunities. And if you want to take a quick look at the dollar, I think we should. We'll take a look at it through DXY. I think we can do that on this chart. Nope, I'm sorry. We're going to have to look at it through UUP. Okay, let's make this. So UUP is not my favorite instrument to look at for the dollar. I'd rather look at the cash, but for now we can at least get an idea since this tracks. So just the opposite. So there's your relationship, Ricardo, that you're seeing between gold and the dollar, right? Just the opposite, where we just showed you that gold was having a golden cross on the daily chart. This is having a death cross, where the 50 is crossing below the 200 on the daily chart. And clearly now we've entered a bearish phase in the dollar after a lot of topping action. And if we just pull up a little bit, though, we probably will get some support here. We're looking at around the 98 level, could be a nice area of support in the cash dollar. In terms of the UUP, it comes in more around 27. And let's just get a better number on that. This last low that we had in 2022 was more like 27.10. And so right now I would liken that to about 98 in the overall dollar. And again, look at just how real motion, the momentum here has been really bad. Also entered a death cross here long before this did. And also now could show some support around its Bollinger Band, possibly even a reversion to the mean, which would mean some kind of pop, but we don't think that pop would be long standing. And of course, you can see how low the dollar is in comparison to the SPY. But still, in terms of its leadership role, it still hasn't hit the bottom here when the price was much higher, which tells us that we may be coming into some level of support soon. Obviously, we have PPI this week. That'll be a factor. And we have some Fed speak. That'll be a factor. But for now, we think the overall trend is down, just as we think the overall trend in gold is up.
Right. I've worked with you for a while, Mish, and you're very much a technically oriented strategist and trader. Just looking at this morning, the price of crude oil and natural gas slightly dropped, but does it seem from your charts that it's still on very much a bullish trend? What can you see there and what can you highlight?
Well, with natural gas, I feel that trade is done. Just from one thing that as a commodities trader, you have to understand is cycles. And that's why I say we are in a super cycle of certain commodities while others are done. And we saw the super cycle of natural gas, obviously, after COVID and with the breakout of the Ukraine-Russian war here as we went through the beginning of 2022. And even though it dropped precipitously, it tested up and it made a new high, but never could sustain it. So we really felt that that was a topping action, and you certainly can see that's true. In fact, we were buying natural gas around these levels at the end of 2021. So we're right back where we started. To me, that means this would not be something of interest. That doesn't mean we can't see rallies here and there, or the situation can't change. But the reason why we're seeing a little bit of a rally today is based on some cold temperatures throughout the United States, and not, to me, a real sustaining fundamental reason. However, on the flip side, if we take a look at USO, and I like to use the USO, we could put up futures charts, but we always like to assume that most people, unless they're real futures traders, feel more comfortable getting involved in the exchange traded funds, and they follow the futures, not necessarily always as cleanly, but at least you get the idea of the overall trend. So with USO right now, this too obviously peaked right around the time when the natural gas did. The difference is the fundamentals here are very different. Number one is obviously we have a situation where you always have to watch the Middle East in terms of what's happening, particularly in Iran. Even though it's more of a social type of protest that's going on, you never know when that can escalate, number one. Number two is obviously the oil demand versus the supply has been in question, in that the strategic oil reserves that the US gave up, they did not buy under $70 a barrel. They only bought a fraction of what they've actually put out. With no new drilling here, there's a shortage issue. The Middle East are even saying that with the production cuts, there could be a shortage issue. And China waking up could put pressure on the demand. And so we believe right now that this would be, if we were going to do an energy play other than things like OIH, oil services, and XLE, the energy ETF, USO could be of interest, particularly here if it holds this 50-day moving average, because now what it's doing is it's showing with a series of higher lows that with the gap up today, if it holds, that something is going on here. And if that something goes on, plays out, there's no reason why we can't see oil get through $80 a barrel if we look at the futures, and possibly back up to 100 before we reevaluate.
Right. And I know it's very early stages with China opening up and going out of lockdown. That could have potentially played a role in the narrative of commodities rallying. But looking at copper, for example, and other commodities, you mentioned sugar as well, do those contribute to higher inflation, or what do you see within those charts, and how do they play from a macroeconomic perspective?
What's so interesting about the copper market is that the fundamentals have changed. It used to be Dr. Copper was the big key to whether or not US was heading into a recession. And clearly, if you look at the copper prices right here, they don't look particularly recessionary. However, that's because the fundamentals have changed with, again, copper shortages that you've heard about throughout the world. Number one, and number two is, of course, its big use in the electric vehicle space, which at this point now has been at numbers that are making it more adopted within the US. Once you have over 5% of car sales in electric cars, it's considered to be mass adoption. So we're at that point with more and more car companies every day coming out with electric vehicles. So there you go. So copper is definitely showing the strength here. However, if we did get into any kind of stagflation type of environment, where the housing market, let's say, got even more impacted, and I don't see a crash, but it's possible. I don't know if in the copper at this point would be with this big extended move where I'd want to put my money first. However, if we did get a decent correction and it held some of these key moving averages, this is COPX, also an ETF, and got back down closer to the 50 or around 35, we felt there was a huge breakout on a weekly chart over 30. Mainly on the fact that it was holding this 200-week moving average. And once it really cleared over, like say 30, 32, actually area would have been better. That was the key breakout. However, we still need to get through certain other areas in order for this to keep going. If you look at this on a weekly basis, this is why it's so interesting and important to look at more than one time frame. So far, we're getting a little bit of a correction, but it's also inside the big range that we had last week. So yeah, I like the industrial metals, particularly as we're looking at the ETF XME, which covers steel as well as copper. That also on a weekly basis has had a big breakout. You can see how all of these things have based out over the 50-week. If we take a look here on the daily chart, You can see how this now has obviously the same kind of resistance we're seeing in gold, but a lot of upside potential now, especially as we've gotten through all these key levels here, 50, 53 in the XME. So yeah, I mean, this is an interesting time, and that's why you mentioned my technical analysis. I love to have a macro picture and a macroeconomic picture. And obviously, coming into this year, thinking that gold would go up has turned out to be key. But if you don't have a technical background, then you can wind up doing what a lot of people did in 2022, which is buying a dip with no risk control and realizing that the market keeps dipping. It's the same thing with these metals. Even if you want to buy strength, so far they've still been a buy weakness, sell strength market. And if you don't have an idea of those parameters on a chart, you can get yourself into a lot of trouble, as the nature of commodities is very volatile.
Right. Mish, last question to you. What are you trading now, and what is your favorite trade that could happen or already happened?
Well, I just want to, you mentioned sugar, so I know we're short for time here, but I really think it's important for us to look at a sugar chart, because what we haven't talked about is the potential of food inflation. Because they're saying that food inflation in certain areas like eggs and bread and milk have gone crazy, while others like meat has come down a lot. But in terms of food inflation and social disruption, which is what I'm a student of, we really need to look at, and I think we can actually get a sugar chart on here. We need to look at this sugar, because the sugar, and this is a daily chart right here, has a tremendous basing action where if we can actually continue to get through 20 cents or 20.5 cents per pound of sugar, I think that becomes a very, very dangerous situation, and possibly another reason why we'll start to see, like I say, particularly precious metals go up. Here we are in a weekly chart, and you can just see how strong this is in sideways action. But with our highs up here that we had again in not since 2016, if sugar continues to go up, I think that's going to show that we really have a situation here where food inflation is something that has to continue to be watched, and particularly as social unrest goes. So that's something I just wanted to point out. Over 21, we can say 21 cents, that would be troublesome. If we break down under 1850, then we can say, all right, maybe, maybe we're looking a little bit differently in terms of food inflation, and that could relax everything. Flexibility, that's the key to this trading game, right? So what I'm looking at right now is a couple of stocks. In our quant models, we have an interesting stock that reports this week, and that's Netflix. So this is a daily chart of Netflix, and we know that earnings coming out this week is going to be key. And we did actually fill this gap from one of the very bad earnings that we had back in 2022 when this thing gapped lower. We now have actually filled this gap. So we think that's a good sign. I would wait now till its earnings report comes out. But we do believe that if Netflix can continue its track and get through, say, 330, which is right around that gap level, and if you follow my bar to the left, you can see also where those lows were. There's no reason why we can't start tackling the next gap, and that would be up closer to about $500. Obviously, if the earnings does not turn out to be well, we've already taken a profit in here, we'd get stopped out of the rest, and then we change our mind. But we like Netflix for streaming. And the other one, just to switch, is more on materials. This is Fluorcore. This is probably, I was just interviewed last week on stock charts, and they said, if you had to pick one stock to new highs, what would it be? This is the stock I'm going with, which is Fluor Construction, where we do have skin in this game. If you go to the all-time high in this stock, of course, we're going back here to 2008 before the crash, when this was trading up at 96. We're only at 36. I would be happy if we can see this thing move up closer to about 60. That's what we're looking at now, move to about 58.60.
Mish, it's always a pleasure to have you on. We've been working with each other for a while, so please send my regards to everyone at MarketGauge who helps on the background. But thank you for your time, and I look forward to speaking with you again.
Thank you so much, Ricardo, and thank you everybody for watching.